Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific time on Friday, June 7th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news. We're deep diving into the fascinating intersection of Bitcoin and artificial intelligence tonight, exploring the potential of a future where these two revolutionary technologies intertwine. We'll also look at digital currencies from a more traditional banking perspective, with some of the world's financial giants dipping their toes into shared ledgers. From there, we'll journey to the Netherlands, where a major player in the crypto exchange market is making some significant changes. We'll also delve into finance, where a particular protocol faces scrutiny from regulators. Then we'll turn our attention to a high-profile figure in the crypto exchange industry who's currently under investigation. And finally, we'll head north to Canada, where the main financial authority is making its stance clear on a key aspect of crypto assets. So let's get started. Arthur Hayes is a former CEO of Bitmex and the current manager of a family office named Maelstrom. Hayes expressed his belief that Bitcoin, with its digital, uncensorable, and scarce properties, is the ideal currency for an AI-driven future. He suggests the decentralized nature of the Bitcoin network and its users' control over their assets align with the probable characteristics of future AI economies. Bitcoin's value is intrinsically tied to the cost of electricity through mining, making it an efficient and predictable store of value for AI systems over time. Bitcoin's scarcity and censorship resistance offer AI-based technologies an advantage over other forms of currency. Bitcoin's supply is cryptographically limited, meaning that it cannot be manipulated. Hayes predicts that if the AI economy adopts Bitcoin, the need to escape inflation within the fiat system and the drive to participate in the next phase of human and computer evolution could spur investors to overvalue Bitcoin's growth. His predictive model forecasts that by 2025 or 2026, the AI economy could be worth between 5 and 50% of the global GDP, generating a potential surge in Bitcoin's value as high as $760,000 per coin. In other news, Lightning Labs unveiled a new set of tools for AI to send and receive Bitcoin on the network's Layer 2 solution. These tools are designed to make payments faster, cheaper, and easier for AI developers, who will be able to distance themselves from traditional and often prohibitive payment rails while also enabling pay-per-use AI models on Lightning. The tools are built on the L402 protocol. That's a Lightning native authentication mechanism, and they plan to employ LangChain. That's a library used to simplify operations with AI applications. The company believes these tools will allow developers to build more accessible AI infrastructure for both humans and AI agents alike. And I've done a bit of research on LangChain for my job at the Fiat Mines. Here's my best explanation for that. Just like cross-chain bridges allow transferring assets and information between different blockchains, LangChain allows for integrating different language models into applications. It provides a standard interface that can be used with various language models, similar to how a cross-chain bridge provides a standard way to move assets between blockchains. The lack of a native web-based payment mechanism for AI applications forces developers to rely on dated payment methods, such as credit cards, with the additional expenses passed on to the user. Lightning Labs notes that intelligent LLM or AI agents cannot easily access fiat payment systems as they are not registered entities with any nation. This development is seen as a step toward solving this problem. It's an interesting question, right? Can AI own Bitcoin? Bitcoin is property. Corporations are artificial persons who can own property, including Bitcoin. Moving closer to something like AI, DAOs can also own property, including Bitcoin. So both corporations and DAOs can hold and dispose of property, including Bitcoin. What about AI? Can AI own and trade Bitcoin? The answer to that question, like the future of AI and Bitcoin, remains uncertain, but the potential for their integration is promising. As Hayes puts it, quote, "I plan to jump aboard the narrative hype wagon and profit." Before we dive into our next story, remember to like, follow, and subscribe to stay updated with all the latest in the crypto world. Now let's move from Bitcoin and AI to a story about some of the world's financial giants. Citigroup, HSBC, BNY Mellon and other global financial giants have been testing a regulated liability network for conducting wholesale payments using shared ledgers. This system, which is a collaboration with the Federal Reserve Bank of New York's New York Innovation Center, has shown potential for improving the processing of wholesale payments. It can synchronize US dollar-denominated payments and facilitate settlement on a near real-time, 24 hours a day, 7 days a week basis. The network experimented with transactions in commercial bank deposit tokens, settling with hypothetical wholesale central bank digital currencies on the same platform and using a shared ledger. It also explored the wholesale movement of US dollars across borders. The network reduced friction over speed, cost, off-hours availability, and the payment settlement process. Other participants in the experiment included MasterCard, PNC Bank, Swift, US Bank, and Wells Fargo. The Innovation Center said the proof of concept was conducive to exploring tokenized regulated deposits and understanding the potential functional benefits of both central bank and commercial bank digital money operating together on a shared ledger. However, the center indicated that it is not endorsing this approach, and the work does not reflect any position of the Federal Reserve. The participants have yet to commit to any next steps for the experiment. Raj Damodaran is the executive vice president at MasterCard. He referred to their effort as an important exploration into how shared ledger technology and the regulated financial system can come together to deliver safe, dynamic, and efficient payment solutions. Now, here's the wrinkle. The Federal Reserve is on the verge of starting its long-awaited FedNow real-time payment system in the United States. This is meant to allow banking customers' transactions to clear right away rather than over the course of a few days. The group stressed that the wholesale central bank digital currency used in the experiment does not mean that the Federal Reserve has decided to adopt a central bank digital currency. That we should read nothing into the fact that the experiment used a CBDC intended for payment between financial institutions as their proof of concept. From the world of traditional finance, now let's turn our attention to the world of crypto exchanges. And remember, if you're enjoying our podcast, hit that subscribe button and share it with your friends. The world's largest cryptocurrency exchange decided to cease its operations in the Netherlands. This decision comes after Binance failed to secure recognition as a virtual asset provider. Dutch customers are now being referred to Coinmers. They're a rival crypto exchange that the central bank registered to offer crypto exchange and wallet services in 2020. Binance assured a seamless transition for its Dutch users, enabling them to transfer to Coinmers quickly and securely if they wish to do so. In the past, Binance has faced regulatory issues in the Netherlands. Last year, the Dutch central bank fined Binance €3.3 million for serving clients in the country without the required authorization. Following this, Binance announced that it would not accept any new customers from the Netherlands. They said existing clients would be unable to deposit, trade, or purchase after July 17th. The company's premises were also recently raided in France. Binance and its CEO, Changpeng Zhao, have been charged by U.S. regulators for operating an unlicensed securities exchange. In addition to these challenges, Binance is also experiencing changes in its leadership. The company's chief strategy officer is Patrick Hillman, or was. Hillman confirmed his departure from the company. He expressed his gratitude for the opportunity to work under CZ's leadership and said that it was time for him to move on to the next challenge. His departure comes at a time when his family is expecting another child, and he believes the timing is right to step aside. Binance's decision to exit the Netherlands and its departure of its chief strategy officer are both indicative of the challenges that the company is currently facing. While Binance remains committed to obtaining the necessary authorizations to reintroduce its products and services to users residing in the Netherlands, the company's current situation raises questions about its ability to navigate regulatory challenges and to maintain its leadership in the global crypto exchange market. Moving from one crypto giant to another, let's now delve into the world of decentralized finance. And hey, remember to give us a like and follow us for more updates. The decentralized finance protocol BarnBridge is under investigation by the U.S. Securities and Exchange Commission. And let's be clear, it's BarnBridge, not Bainbridge. Now, BarnBridge offers interest rate swaps that allow any variable yield offered by crypto platforms to be swapped to a fixed rate. They had just over $1.2 million in locked tokens as of Friday. At their peak, the protocol held $500 million in users' assets. Douglas Park announced the investigation. He's the legal counsel to the BarnBridge DAO. Following the announcement, BarnBridge's bond tokens slumped over 10%. Park advised that existing liquidity pools on BarnBridge should be closed and that all work on BarnBridge-related products should stop due to the SEC's actions. More to the point, he also added that individuals submitting work will not be compensated. The specifics of the investigation have not been publicly released due to the ongoing and non-public nature of the SEC's investigation. The news of the investigation led to mixed reactions within the BarnBridge community. Some members raised suspicions over the announcement. One member asked for supporting evidence of the SEC's investigation and implied that BarnBridge's founders might be using it as an excuse to facilitate an exit strategy to potentially defraud investors. Co-founder Tyler Ward refuted this claim. Ward stated that it would be, quote, the worst thought-out rug attempt in history. Others took the news more lightheartedly. One suggested that it's time to move to Europe to hide from the SEC. The price of BarnBridge's native token, BON, has fallen 1.9% since the news emerged. It's down 98.3% since its all-time high price of $185.70 on October 27, 2020. The SEC's investigation into BarnBridge, which is a small to mid-sized DAO, could suggest the securities regulator isn't just looking to target the crypto space's largest organizations, which makes sense. The largest operators can defend themselves, and the SEC prefers targets that cannot fight back. Now let's shift our focus to the world of DeFi to a story about a prominent figure in the crypto exchange industry. And let's remember, if you're enjoying the podcast, hit that subscribe button. Jesse Powell is a co-founder of the crypto exchange Kraken. He's under investigation by federal law enforcement. This investigation is centered around allegations that Powell hacked and cyberstalked a nonprofit organization that he founded, the Verge Center for the Arts. The allegations suggest Powell interfered with the organization's computer accounts, obstructing access to emails and messages. Responding to these allegations, the FBI and U.S. Attorney's agents searched Powell's home in Brentwood, Los Angeles. The investigation has been ongoing since at least the fall of last year. Now, remember, Powell has not been charged with any crimes. His lawyer, Brandon Fox, said the allegations are one-sided and do not give the government the complete picture. He says Powell did nothing wrong and the matter is unrelated to Powell's employment or his conduct in the cryptocurrency arena. Powell himself sued Verge in California Superior Court, claiming that he owns and has rightful access to the email accounts in question and that he remains a Verge board member. The Verge Center for the Arts, based in Sacramento, was co-founded by Powell in 2007. However, the organization removed him from its board in 2022, stating that he violated Verge's guiding principles. In the wake of these events, a Kraken spokesperson said the exchange is aware of the civil dispute, investigation, and search warrants. The spokesperson also clarified the U.S. attorney advised them that Kraken is not a part of the investigation in any way. They said the investigation does not concern Powell's affiliation with Kraken. This situation has raised questions about the intersection of personal conduct and professional roles within the crypto industry. While Powell's actions are allegedly unrelated to his role at Kraken, the investigation has nonetheless drawn attention, due to his high-profile position. As the investigation continues, it will be essential to watch for any developments that could impact Powell's role within the cryptocurrency industry or the operations of Kraken. For now, however, the investigation is focused solely on Powell's alleged actions in relation to the Verge Center for the Arts, and frankly, I expect it to stay that way. Before we move on to our final story for tonight, remember to like, follow, and subscribe to stay updated with the latest developments in the crypto world. Now, let's head north to Canada. The Canadian Securities Administrators expressed its confidence in the regulated futures market for crypto. They said it encourages better price discovery. The CSA also oversees several crypto exchange-traded funds in the Canadian market, which is one of the largest outside of the US. On July 6th, the CSA released guidelines to assist fund managers in complying with legal requirements for investment funds that hold crypto assets. In the 15-page document, the agency defended the existence of crypto ETFs in Canada, stating that these ETFs have the necessary tools to hedge against the price fluctuations of specific crypto assets. The CSA identified the markets for Bitcoin and Ether as offering the best support for public crypto asset funds, without jeopardizing investor protection. The CSA also imposed restrictions on the proportion of illiquid assets. These are assets in the funds that cannot be quickly sold directly through the open market. The CSA expects investment funds to determine whether the crypto assets they plan to invest in are securities or derivatives after conducting proper due diligence. The CSA also reminded investment managers that they are not allowed to lend assets that are not securities. They also outlined minimum expectations for the custody of crypto assets. These expectations include primary storage in cold wallets, asset segregation, blockchain visibility, corporate crime insurance, and the provision of reports to fund auditors. Another topic addressed by the CSA is crypto staking. The CSA does not explicitly ban staking. However, it expects fund managers to know the potential for liquid crypto assets to become illiquid during staking and to ensure they comply with illiquidity restrictions. In the spring of 2023, several major crypto exchanges suspended operations in Canada due to the regulatory climate. In April, one decentralized exchange announced that it would wind down its services for Canadian users. In May, Binance voluntarily withdrew from the country, as did Bybit. So, what happened? Tonight, we've covered a lot of ground in the world of cryptocurrencies and AI. We started with Arthur Hayes' prediction that Bitcoin could be the ideal currency for an AI-driven future, potentially leading to a surge in Bitcoin's value. Then we discussed how financial giants like Citigroup, HSBC, and BNY Mellon are testing a regulated liability network for conducting wholesale payments using shared ledgers, showing potential for improving the processing of wholesale payments. We also touched on Binance's decision to cease operations in the Netherlands after failing to secure recognition as a virtual asset provider. This move reflects the ongoing regulatory challenges in the crypto industry. In the DeFi space, we learned about the SEC's investigation into BarnBridge, which has led to a slump in the value of its bond tokens. We also delved into the investigation into Jesse Powell, co-founder of the crypto exchange Kraken, over allegations of hacking and cyberstalking a non-profit organization that he himself founded. Lastly, we discussed the Canadian Securities Administrators' guidelines for fund managers dealing with crypto assets, including their stance on crypto staking. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed this show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.